Major funding for these broadcasts is made possible by grants from Capital One Bank and Chase Commercial Term Lending, the Witkoff Group, New York Community Bank, M&T Bank, Greenberg Traurig, Perfect Building Maintenance, Genova Burns. Additional funding is provided by grants from AKA Hotels, Corman Communities, Aerial Property Advisors, AVR Realty Company, Bank of America, Merrill Lynch, Bank Leumi USA, Briarwood Organization, CBRE, Citizens Bank, Colliers International NYC, CPEX Real Estate Services, Cushman & Wakefield, Customers Bank, DDG, Dime Savings Bank of Williamsburg, Fisher Brothers, First Nationwide Title Agency, Flushing Bank, Foley & Lardner, Friedman, Handler Real Estate Organization, HAP Investment Developers, Investors Bank, James D. Kuhn Real Estate Institute at Syracuse University, James Orphanides, Chairman USRealty.com, Kilroy Architectural Windows, New York's Window Company, Madison Realty Capital, Massey Knackle Realty Services, Matone Group, Mercantile Commerce Bank, N.A., Meridian Capital Group, Newmark Grubb Knight Frank, Newbanks, MHP Real Estate Services, Optimum Window Manufacturing Corp., People's United Bank, Rosewood Realty Group, SJP Properties, Sterling National Bank, Sterling Risk, Stonehenge Partners, TD Bank, Terra CRG, the Continuum Company, the CUNY TV Foundation, the Moynihan Group, and these friends.
The real estate market is on fire. Everybody is buying. Properties are trading. People are buying, looking. Who knows what's going to happen? So today, with the assistance of my friend Ben Levine, who will be considered the executive producer, we've put together this group of young, dynamic leaders and one older guy over there to provide their insight on how they see the real estate market and what's going on in the market. As I said, my guests today include Ben Levine, who is the Vice President of Development for Douglaston Development Levine Builders, Bryan Wu, who is Director of Acquisitions for Youngwoo, Ben Atkins, who is the founder, CEO of Abingdon Square. Then we have Rob Reffkin, who is the founder, co-founder, and CEO of Compass. And last but not least, my buddy Chad Tredway, who is the head for the Northeast for Chase for all multifamily lending. So what do we have here? We have one banker. We have one former Goldman Sachs investment banker who's into real estate technology and the brokerage. We have a developer who exceeded the age limit, but we still like him.
Look at how young he looks.
Okay, no, I mean he does look young. You know, I'm very happy with the gray hair over there, so I can grow my beard over there. We have the other guy who has a little blonde in here, the developer, and then we have an acquisitions developer and so on. What we were saying before in the green room is that not everyone has seen a total, when there was that recession of 2008 or when 9/11 hit, which was a different time. How do you see the market? And, because as I said, there's irrational exuberance, as one might say. How are we trying to protect yourself that you don't go crazy with this irrational exuberance? Ben?
I think the fundamental thing we do is I look for deals that make sense on a cash flow basis. That's always the easiest thing. I mean, debt's cheap right now, equity is plentiful, but if you stick to what we think of as core investment parameters, which don't allow you to just recognize the gain on the exit or based off of assumptions that are projected 24, 36 months out. I like to buy bricks where I know going in there's an easily executable strategy that gets me to a stabilized asset within a pretty prescribed period of time.
Now we go to the opposite side because, Youngwoo has been involved with a variety of things. And like we were talking just before, that you're going up to the Bronx, which is an area that people feel is booming. And, Silver Cup Studios, good friends of mine, and Ben just announced that they're moving up to the Bronx. They're opening up Silver Cup, a secondary location. You've looked at different deals. You've looked at peers. You've looked at the post office. How do you look at the market today, and how does the family and the organization feel?
I think it's pretty interesting what's happening right now, right? Because the real estate market in New York is pretty overbought in my mind. And there are a lot of eyes on the assets that exist in certain markets. And in particular, in core Manhattan, you have a lot of people who are new to the market, who are bringing a lot of money into it, and are really sort of driving up prices on top of all of the 1031 money. So in that market, we're New York City experts. How do you be competitive? And to me, I was talking a little bit about this before, but you have to really be able to excel in three fields. You have to have the money, you have to have the liquidity, you have to have the expertise, and you have to have the creativity. And if you're being beat out in these markets on the liquidity front, you have to bring something else. So if you can bring the expertise, if you can do something different, and if you can be creative about it, that's one way you win. But for us right now, a lot of the sort of internal mantra that we're going with is don't compete. Go out to the markets where you are really the expert because you live here. You've grown up here, you have the relationships here. Go to those markets, like in the Bronx, pick up assets that are reasonable, that are not overpriced, build in creative ideas, be able to underwrite a good cash flow, and then at the end of the day be able to exit and say, okay, well, my sellout here is reasonable. I don't need to sell out at $7,000 a square foot in order for this to make sense.
Banker, you've seen a recession. You were in Miami in 2007, 2008. How does Chase look at the market today? Because as I started with this irrational exuberance, and as Bryan brought up, the fact that we have a 1031 and people trade assets, they go to the next asset level over there. How do you look at it? And you want to be conservative because if you remember going back to the predecessor of the multifamily at Chase, WAMU was a little aggressive and the world was a little crazy. How are we looking at this?
So our approach is we continue to focus on the fundamentals. And I think the other big thing that we really look for is a long-term partnership with our borrowers. So for us, we're working with borrowers day in and day out. Our borrowers tend to be generational in nature. So they typically aren't looking to flip in and out of a deal. They tend to want to hold for the long term. And really the customer is paramount in every single thing we do. So I think it starts there. But other than that, we feel like the market's really got legs. Prices have continued to climb. Cap rates are coming in. And so we're just careful.
How do you look at the situation of the rent stabilization laws last week, that came up? People say, rents aren't going up under the stabilization rules, but the insurance is going to go up, the real estate taxes are going to go up, the water and sewer go up, and then if you want to maintain your buildings, and the changes in the major capital improvements, that they're amortized over a different period of time. How do you look at all those effects on the market?
Well, overarching, I think, Chase and all banks can agree we want affordable housing for all of the citizens of New York. And as we look at rent stabilization and some of the increases in taxes and water and sewer, we really look at just cash flow of the building. So I think it's still too early to tell how things will shake out, just in terms of what's going to happen with rent stabilization. But overall, we really are focused on affordable places for tenants.
So here's now, as I was starting at the beginning, I have a former investment banker, a Goldman Sachs banker, who's into technology. And we were talking prior to the show what the effect of technology, and we are in a TAMI city. We are in a technology city, especially with all the new companies over here going up on the internet. How do you see technology and its effect on real estate today?
I think technology will continue to inform decisions. I mean, what we want to do is we want to create a world where people make the smartest real estate decisions. And the technology build is meant to answer the questions that people have. The first question is, what's the right price? What's the right neighborhood? Why is this the right fee? Why are you the right agent? There are answers to all these questions given the data that's out there. And so what we seek to do is normalize the data across many different sources. We have 16 sources of data that have different addresses, different sources of information. We want to normalize it to one single account, so you don't have to go to 5 sources of information.
But here is the question, and I understand and the value of the technology.
Yeah.
It's the consumer who's using the technology. Somebody who may be a baby boomer. I'm a baby boomer, but I'm one of the few people who happens to have a Facebook. You can find me on Facebook, Twitter, Instagram. I'm not the normal person of somebody in that category. I'm not sure your dad is at that level of having all this type of thing. Knowing your father, he has no idea. He's still with a quill pen. Would you say that the millenniums are more people utilizing the urban, the Compass program?
Well, I think the greatest myth about the buyer is that buyers are finding apartments by themselves, right? 80 to 90%, depending on the market, of buyers are coming to properties because a broker is saying, you should come to this property. And so the way we think about it is, the tools we build are to inform better broker advisors, whether it's on the sell side or on the buy side, to be able to tell a client, this is the right price. I mean, the idea that, show sheets when you go to open houses don't have analytics around the building, around why it's the right
pretty
price.
Pictures. Come on.
If you were,
I mean,
I think agents are similar to bankers. Some advise in buying and selling a company versus a property, and the same analysis should be. It's the biggest decision that the average person makes in this country.
We were talking before about Levine Builders, Douglaston Development in Williamsburg. Right now, who's coming over there? What's the person who's renting space?
You have a lot of creative types, consultants, people who don't necessarily work 9 to 5 hours. I think you have people that are not interested in living necessarily in the financial district or on the Lower East Side, and Williamsburg has become a destination. 2007, 2008, 2009, as we were building there, I think that we sold a view. People would come, and we wouldn't turn them to Williamsburg, we'd turn them to Manhattan. Giving a neighborhood tour meant parading bankers through the streets so they understood, okay, that's the L train, that's where Bedford is, that's the Bedford cheese shop, that's where C is. I think that now when people come, they're already taking the subway, they're already going to the neighborhood.
If they can get on the subway. Okay, that's part of the problem.
Public transportation is great going to Williamsburg. And if you don't like the subway, you can take the water ferry.
I like the subway, but you have to make sure that you can be pushed on. It's like going to Japan. Okay, push the people over
take
here.
An Uber. You're not a subway guy.
Okay, so I am a subway guy. But here's my question. You're also looking at, you're not, as we were saying with Bryan, Bryan wasn't only talking about Brooklyn. He was talking about the Bronx, where the opportunities are. You're looking right now, you're working on a development in Fort Greene.
New York prices have gone very high, and I think that a lot of the upside has been priced out of deals. And I think that people who are entering into deals now are entering at very high basis. And, I wish them the best.
So for millennium, you are talking like a conservative millennium.
Well, no, here's what I'll say to you. We're doing a project in Seattle right now. And I don't think we've even talked about this yet. We have a site on 5th and Virginia, 2 blocks away from the Amazon campus in downtown Seattle. And there, you're talking about rents of $42 a foot. And you're talking about a basis and a return where a deal can work. And you're talking about a city that has an influx of young, creative people, businesses like Amazon. Mm-hmm. And we like the demographics there. We like the economics. And we're comfortable going there. I mean, I think that 7 years ago, if you told us we were going to Seattle, we would say you were out of your mind. Or I would say I was out of my mind.
Look, Seattle, I've advised banks over the years, and there's been the ups and downs with Seattle. It's a market, but it's one of the fastest growing markets, and it's a need. You went to Florida. You're too young to go to Florida, okay?
I didn't retire.
I mean, South Beach, I can understand, but you went to Wynwood.
Yeah, I mean, it's interesting. When you're looking,
he knows the Florida market well. Good, bad, and the
Florida's been a great market. But, when I approached Florida, I started looking in Florida 2007. And, it was interesting. When I was looking in Wynwood originally, and I was one of the very early guys down there, that market's become very competitive. But when I first started looking down there, pricing was $150 a foot. Rents you were probably netting $7 a foot. I liked what I saw. The metrics didn't make any sense. We got into a recession. And by 2009, pricing was at $75 to $100 a foot, and rents were $12 net. So all of a sudden, the metrics made sense. So I think one of the lessons I learned in Florida is, like in any market, if you're going into a new market, you got to be a little careful, because when you leave New York, everything can seem really cheap. Mm-hmm. But you really have to try to spend the time to understand the market.
You don't have, what makes New York what it is the fact that you have 56 million visitors, that you have people from every college, everywhere wants to come to New York. So there's always a market over there, which relates to Chad's comment before about the rental business. You know, you're always going to be there. So how do you look at emerging neighborhoods as a banker? You know, because, you know, Fort Greene at one time was considered, you know, not an area. And then we were saying, Ben, part of the show about, you know, East New York, but East New York is good for certain type of business. How do you and the bank look at different neighborhoods today?
So the simple answer is really deal by deal and sponsor by sponsor.
So you're going back to the basics of older people. It's no. You're not talking about a technology oriented. You feel comfortable with sponsors, and as you know, as I said prior to the show, the greatest thing about the real estate business, and I was analyzing this the other day, that you know there's 2-3 generations, and you could be a generational person like you are. But you can be a generation person. You can create your own generation. There are people who started, you know, and you know, because I've done so many life stories, and you know that they've evolved in the real estate business, and they've been able to grow and to see different markets, like your father when he came into the market, when your father was working for people.
Well, it's what you said. I mean, technology is amazing. We think it helps make the market more efficient, but nothing can substitute for a good relationship with someone you know and trust. And
which is perfect because, Rob, if you look at their business, the initial business plan, which you're still continuing, was technology, but the combination of technology and the people.
Yeah, we want to combine experienced agents with technology. We believe that across industries that people have gone from pure relationship-driven selling to relationships powered by data-driven selling with additives to selling with analytics, and we want to be at the forefront of that. You know, this is a business where agents have increasingly become professionalized over the last decade. Regardless of whether we're here, it's going to continue to happen, and we just want to help make it go even faster.
Now, what's interesting is, you know, there have been plenty of brokers in this business that we know, you know, residential brokers, but I'd say you've been the only new major player to create. You know, Core came in to a certain level and they grew to a certain market. You know, Prudential Douglas Element, it was a 10-year, it's even a 15-year evolution over there. Do we see, because of the technology and because of the money available, do you see a lot of players coming into the market perhaps who are new technology for real estate? Do you see, and how important are these technology companies to you as a banker and to you as a developer and so on?
Well, I think Robert said it best, which is it all comes back to the customer. So for us, we're constantly looking for ways to innovate, to grow, and to service the customer, and part of that is on turn times. In New York, you know, turn times on how fast you can close a loan continue to be an issue, and we're attempting to use technology to process a loan within 20, 25 days. So it's an application that you probably wouldn't think of when you talk about banking or innovation, but it's something that, to Robert's point, really revolves around customer service.
You know, I think that when you talk about technology in real estate, from my own personal experiences, we've looked at things like rent payment, and you look at some of the new rent payment businesses, and you say, wow, I think this is a great idea. Wow, I'd love to integrate this into my property, but I don't necessarily want to be the first person to do it. You know, if I have a 369-unit or a 509-unit rental building and there's a problem and I'm one of the first people, who do I call? How does it get dealt with? I think that, you know, you look at something like Butterfly MX is another one, which is a security system that a bunch of guys from New York real estate actually started. It's a great concept. You know, it's another way to enter your building, virtual doorman, but how much can I trust it? You know, I think that it's hard to be the first mover in a lot of these businesses.
Look, I got a phone call last week from a person who just quit his job at Apple, and he was evaluating a job going to work for a startup business who didn't have them. They had $15 million in capital, and they wanted to go into the management business of B and C office buildings. And their plan was so skewed because they felt that they would get the B and C office buildings if they dealt with the administrative assistant in the building. I said, they don't own the building. The building is owned by an owner. The owner is the person who provides the services. So sometimes the greatest technology idea is you have to apply it and speak to maybe the focus group or the group of people who truly understand the real estate.
One thing one thing which is has been out there, has been getting a lot of press recently, is obviously the crowdfunding platform. And as a developer and a sponsor, it's always intriguing to have access to other equity sources. I think that I'm not sure what asset that platform offers yet to my business. I'm still thinking about it.
The interesting matter on that crowdfunding, because I did have it at a seminar that I hosted a couple weeks ago, is that Fundrise, who is probably one of the bigger people in crowdfunding, it's really crowdfunding for debt. They're not talking about crowdfunding for equity. So what has happened is it's preferred equity, but it's not. It's predominantly debt because it's easier over there.
And it's a safer investment.
It's a safer investment. And the other problem is that you have with crowdfunding for equity is if the things don't happen, you're going to blow up. It's going to be like the tax shelters and the ticks. You're going to have a problem over there. But crowdfunding is evolving, and there are different type of people in the crowdfunding.
We haven't really seen that in the primary markets, though. So it tends to be tertiary or secondary markets where we're seeing.
But back to your question about technology. Sorry, I didn't mean to interrupt. You have to look at technology, but you also need to have smart people that understand how to implement the technology.
And understand the business.
I've sat down with 24-year-old kids that just graduated from college, worked a year in banking, and said, we have this new underwriting software that's going to revolutionize the way that people underwrite
But that's
buildings.
exactly what I said before about the situation about this person from Apple. Who quit the job at Apple because they felt that this is an idea in the business, and without going through the entire model of speaking to people in the management business.
It's the same with crowdfunding. I mean, as crowdfunding moves more towards the less from the debt side into the equity side, at a certain point, somebody has to be underwriting the real estate and has to be underwriting the development strategy for that individual asset to ensure for the investors that it's a good deal.
So it's a sexy thing to look at, right? I mean, I think real estate is a really sexy asset class for someone in technology to look at, because you're saying, I see this enormous market. I mean, what is the real estate market in the United States? Like $13 trillion, right? Taking a look at this enormous market, I think I can come up here and create something efficient and be hugely disruptive. Rob, your company is doing it right now with Compass, right? I mean, WeWork is another company that's coming up and being very disruptive. But the question really remains on whether or not they can be successful in the long run, right? We're right now exploring different multifamily ideas, and we have a building in which we actually leased out a portion of the building to a company called Compass. So Compass is doing this co-living concept here in New York and in San Francisco, and they recently got into trouble. And I think it really came from someplace where. I'm sorry, it was Campus. They really didn't know what Compass. Campus.
Please don't.
Not Campus.
We're going to make a shut off.
Campus.
Right. Campus, and they had a problem because they didn't understand the fundamentals, right? They didn't get brick and mortar, and I think brick and mortar is something that's very hard fundamentally for technology to understand.
To your point too, it's different between kind of residential, the condo or single family market, and then the commercial market as well, right? So it's highly localized. You really have to understand the sub-market. You have to understand the asset class. You have to understand if there's leases or if there's rent-stabilized tenants, or there's a number of things that a computer can't tell you. So it's really two different
It's like
types
what
of
Ben said before, when we were talking about East New York. East New York is fine for industrial. And if you understand the ICA, the ICAPs on the taxes. I did a show the other day on production in New York City. I had people in food production, and one of them said, do you realize the opportunities that you gain he said, if I went to New Jersey to move my catering facility, they were going to give me $12 million. He said, I come to New York, I get $3,000 per employee. It's a different situation. And, when you're evaluating, it's like going, God forbid you have a serious health condition. You don't go just to the first urgent care center. You evaluate more than that. And fortunately, the good players, or the players who are going to remain in real estate through recessions, ups and downs, are going to spend more time and evaluate this, as opposed to some people out there who are maybe new kids on the block, foreign money, investors over there who see the market. I do have my crystal apple over here. Okay, that one of my younger guys got me a couple of months ago. So where do you see yourself in 5 years?
I think that our goal is to build high-rise mixed-use rental all over the 5 boroughs, as much in Manhattan and core Brooklyn.
Plus Seattle and Arizona, too.
And actually London. We're doing a hotel in London. The key is to buy at the right time. And as,
Which is what Bryan said before, 100%.
right. But I think that right now is not the right time to buy development. I think that in the next few years, as rates go up, there's a little disruption in the economy, that there will be opportunities, and it's all about positioning yourself so that you could be taking advantage of those situations, not that you're going to be taken advantage of by those situations.
Ben?
I think that I love New York, and New York's a market that I will always do business in. I think that I see myself doing more business out of New York in the next couple of years. And one of the things that we've spent a lot of time carefully looking, and when you're from New York, you've done a lot of business here, you kind of sometimes feel there's no other place to do business, and New York's a unique animal. But the macro demographic trends across the United States have really mandated that there's a lot of other cities to look at where a lot of young people are moving. There's a lot of population growth. They're pro-business environments. So I think that it takes some time to stand those markets up, but I think looking out of the city right now, there's a lot of opportunities.
And I think it's a perfect way you're talking about opportunities, because that's what Compass is doing, okay? You started in New York, you went to Washington, and you were saying, where are you going?
Here we're going to go to Miami in late August, and then Boston. And in 5 years, I would hope that whether you're in Taiwan, Taipei, London, or Los Angeles, you say, "Hey, I want to buy a place. Let me Compass it first." Right? That's the world we want to create.
Banker, where do you see Chase, yourself, and the growth?
So for us, it's a long-term commitment. Look, our bank's been around for over 200 years. We expect to be around for another 200. We're incredibly committed to the East.
I like that quill pen you have up at
you like
the
that?
50th floor.
Yeah, we're incredibly committed. So I think for us, we want to be the most customer-friendly bank for multifamily in the city.
And your other colleagues want to be in that way for other commercial real estate also.
For office, industrial, and retail, we're getting traction there as well, and we look to mirror what we're doing in multifamily.
With like 30 seconds left, Youngwoo.
5 years from now, king of the world, right? But I mean, who knows what's going to happen? Honestly, I think that New York is a little bit overbought right now, so you got to be careful in that 2 to 3 year time span. But 4 to 5 years out, there's going to be a lot of buying opportunity.
Okay.
A lot.
So I'd like to thank Ben as bringing everyone here, except for my friend Chad that I brought. Bryan, Ben, Rob, and Chad, and I'll see you next week.